What's up guys, Bill Hawk here, back with another video. And usually I'm talking about stock market content, and I still believe that US equities should be your #1 allocation in your investments. But today I want to talk about cryptocurrencies and smart contracts more specifically. Right now there's undeniably one king that's holding the throne, and that is Ethereum. There right now is being a lot of smart contract protocols being developed as quote unquote the Ethereum Killer. So we're going to take a look at those, we're going to deep dive into them and seeing whether any of them are potential actual Ethereum killers or whether they're just ghost chains. So let's take a look at that, and let's first take a look at blockchains in general. But first, I want to remind you to please hit the like button and subscribe if at any point in this video you receive some value, because it helps me out with the YouTube algorithm and it helps make me feel good and makes me feel like I'm actually doing something of significance rather than just talking to myself on this camera. One more thing before I begin is I understand that this video is going to be quite technical. I'm going to try to make it as simple as possible so that anybody can understand, because we're all new to this and we're all learning. So bear with me and just try to stick with me, because I think it's really important to understand the crypto landscape along with US equities, because this is a growing area and we have to know about it as investors and we can't just ignore it. So yes, it might be a little boring, but I'm not going to be the guy who's just saying buy this, buy that, sell this, sell that, and pump this and dump that. I'm going to be the guy who's actually talking about the technology, because that's what I'm about here. We're going to weigh the pros and cons and make an objective decision. So very quickly, what exactly are smart contract platforms? And to understand this, I want you to think of a vending machine. You deposit money into the machine. It acts as an intermediary to validate your payment, which then dispenses your soda can. The machine, after taking its cut, sends the payment back to the vendor. And this is an example of a smart contract. Now this could also apply to, let's say, laundromats. And obviously you're not gonna be this good looking standing next to a laundromat unless that's what you do, of course. Now let's apply this example to a blockchain. Think of the vending machine or the laundromat as a smart contract platform. And the fee that goes to it is essentially going to the miners who are securing the platform. And if you don't know what a miner is, check out my video on that. It'll do a better job at explaining it than I can in this one. But essentially what they're doing is validating the transactions that occur on the blockchain and securing it. And now, instead of limiting ourselves to consumer goods only, apply this to literally anything and everything. And that is Web 3.0, and that's what we should be excited about. The revolution in NFTs and DeFi, or decentralized finance, and even DAOs, decentralized autonomous organizations, are all happening on top of these smart contract platforms. So they're building essentially decentralized applications, or dApps, on top of these layer 1 protocols. They're called layer 1 because everything is built on top of them. Anything built above them is naturally layer 2. Anything above layer 2 is layer 3. You get the point. It's pretty simple, right? So this is why it's really important to understand the layer 1, because it really needs to be secure, and it's secure through consensus, which you probably know of as proof of stake, proof of work, proof of history, and proof of authority, things like that. I just want to emphasize that it's really important to understand these layer 1 protocols, because that's where all the innovation is happening. You shouldn't be investing in anything crypto related, going after the shiny object because it has a cool name or a cool promise, if you don't understand the technology behind the layer 1 protocols. You might already know the answer to this, but why not Bitcoin? Bitcoin was the pioneer of blockchain technology and considered by many as the gold standard, but it was created by Satoshi Nakamoto as a legitimate alternative to fiat currency, and not necessarily with the complexities in mind of smart contracts. The narrative for Bitcoin has always been about being a cryptocurrency, but it's recently shifted to being digital gold, or a store of value, mainly because of the issues surrounding its scalability and volatility. However, I do believe that we're in the early stages of that currency narrative being revived, as Bitcoin scalability is being resolved in the development of layer 2 payment protocols such as the Lightning Network. These can be very complicated subjects, but I just wanted to make you aware of them so you know that there is development happening on the Bitcoin network, and there are people working to upgrade them. So smart contracts is something that's happening, which no one's talking about. So a lot of the scalability issues with Bitcoin and even Ethereum are being resolved with these side chains, or layer 2 protocols, which are basically acting as blockchains beside or on top of blockchains. And one of these with Bitcoin is Rootstock, or RSK. And this is a side chain that is compatible with the Ethereum Virtual Machine, which enables smart contracts. So basically any application on the Ethereum can be built on RSK, which is secured by Bitcoin. And this function will be further enhanced with Bitcoin's Taproot upgrade. And this upgrade is the biggest it's had in 4 years. And this will enable the inherent support of smart contracts on the Bitcoin network, which is a pretty big deal in my opinion. And this is going to go live on November 2021, which again, not really a lot of people are talking about it. Just to spell it out, I think that there is potential further upside to the price of Bitcoin once this becomes more common knowledge, or there's more exposure to it, because we saw what happened with the price of Cardano or ADA once smart contracts were enabled on that platform. And I understand that it's going to be much harder to move the price of Bitcoin because it's a much larger market cap, but it's just something to consider. And just to be clear, I don't identify myself as a Bitcoin maximalist or a crypto maximalist. I don't identify myself as anything. I'm just here to make money and understand the technology. But I wouldn't be so quick to dismiss Bitcoin regardless of my beliefs. Okay, so Ethereum was built for smart contracts, but what's wrong with it? And it's the same issue with Bitcoin, its scalability. Vitalik Buterin, the co-founder of Ethereum, best described this as the trilemma, where scalability is always compromised for an increased security and decentralization. So as you can see here, once you shift towards more decentralization and security, you have to give up scalability. And if you shift more towards scalability, you have to be giving up decentralization and security. The perfect balance of security, decentralization, and scalability is pretty difficult to achieve on one blockchain, which is why today we have these layer 2 solutions that are built on top of these layer 1 protocols like Ethereum to address the speed and efficiency and scalability problems. But these are kind of like hack jobs or patch jobs, and still the goal is to build that efficiency into one blockchain, which is the concept behind Ethereum Killers. Ethereum Killers are basically blockchains which are looking to improve on one or more of Ethereum's shortcomings, so essentially looking to dethrone the king. And there's a ton of layer 1 protocols, smart contract platforms, and Ethereum Killers all in the same category, trying to be the next Ethereum. So I can't cover them all today. I can't even keep up with them, to be honest. So I'm going to discuss the top ones based on the fundamental criteria and analysis that I've determined to be important. So let's get right into it. If I've missed anything, I'm happy to talk about it. Leave them in the comments below and let's have a productive discussion. Don't attack me. Don't say I'm stupid, because I just don't appreciate it. Decentralization is an important element to any layer 1 blockchain because we want to make sure that there's no one player that can hack or halt the network. So unlike proof of work, proof of stake only requires 33% of the validators, and validators are essentially the same as miners who can halt the network. So one important metric we want to look at is the number of unique validators. From this chart here, we can see that Ethereum 2.0 has the largest number of validators by far. But before we conclude that Ethereum 2.0 is the most decentralized, we have to question this data because it is a bit misleading because it doesn't identify what is a unique validator. Based on research by The Block, about 30,000 of the Ethereum validators are unique, so Ethereum still has a significant lead against any competitor. But there are other things to consider, like staking pools or minimum stakes and even minimum CPU requirements. So in other words, how easy is it for the average person to become a validator? When looking at minimum hardware specs, I came to conclude that Avalanche and Cardano are the most democratized, whereas Solana, Polkadot, and the Binance Smart Chain are the least democratized with their high minimum node specs and or validator caps. On top of minimum hardware requirements, there's also sometimes minimum staking requirements, and this is where Ethereum's minimum 32 ETH stake puts it at a disadvantage because not everybody has like 70 grand to be staking. So that puts it at a disadvantage in terms of decentralization. But when we take a look at initial token distribution, this gives us further insights on the blockchains, and we can see that Ethereum and Cardano are the most decentralized in that sense from token distribution. And decentralized governance is something else completely separate, but I came to conclude that from a decentralization perspective, I would probably have Cardano number 1 and Ethereum number 2. So now let's talk about scalability, which is the ultimate problem we're trying to solve for, which Ethereum is currently having problems with. And the perfect metric for this is transactions per second. As you can see here, ETH 2.0 has a potential 100,000 transactions per second. But again, this is in development, so nobody really knows for sure. Cardano is allegedly able to do over 1 million transactions per second, but that's when it's fully built out, and we're really far from that. So it's a really big, far claim right now when it comes to these transactions per second because nothing's actually built out. Solana actually has something that's close to 50,000 transactions per second right now. But remember, there's a decentralization factor that we have to factor in. And Polkadot is in development with 100,000 transactions per second. Just for comparative purposes, however, Visa currently transacts at about 2,000 transactions per second, and it has a max capacity of 65,000 transactions per second. So any of these blockchain developments that we're seeing right now should satisfy the needs that we have. I'm counting out Solana from a decentralization perspective because it's not the same as Ethereum and Cardano. They're on leagues of their own, and this is where, in terms of transactions per second, Ethereum 2.0 will have enough for the needs, in my opinion. But Cardano, again, takes a number 1 spot in terms of potential, but this hasn't been proven yet. Again, neither has Ethereum 2.0, so really we're just speculating right now. But again, I would rank Cardano number 1 and Ethereum 2.0 as number 2. So yeah, a lot of this is really just speculative shit and marketing hype based on things that haven't happened yet and haven't been live on the mainnet. So let's get to my favorite part of the analysis, which is on-chain analytics and transactional data, so we can see what's actually happening now and make our assessment based on that. Based on actual transactional data happening on the blockchain, Solana is a winner by far. It's producing 60 to 70,000 transactions per day. The Binance Smart Chain is at second place with about 6 to 7 million daily transactions, and there's currently anywhere from 1 million to 1.5 million transactions per day on the Ethereum network. And for comparative purposes, which we can't see here on this chart, Cardano is at about 200 to 300,000 transactions per day. But before we conclude that Solana is the most efficient and scalable blockchain, which it may be, it's important to take a look at their data a little closer because it's quite misleading, to be honest. Some of their transaction data, well, actually a lot of their transaction data includes votes for their validators in their proof of history consensus. It includes canceled transactions, and this stuff really just blows the data. This is why daily transacted value is actually a better metric to take a look at. When we take a look at daily transacted value, which is actual value-added transactions, it's no surprise that Ethereum is the clear winner here, followed by Avalanche in second and the Binance Smart Chain in third. Next, we're going to take a look at average fee per transaction. And here again, by no surprise, Ethereum is the most expensive at about $25. Solana is the lowest at a fraction of a penny, but again, it is quite misleading depending on what it includes as transactions. And also, it ignores the inflationary effects of the coin. Nonetheless, it's clearly a very powerful and scalable blockchain. There's no denying that. Cardano sits at about 50 cents per transaction, which is very impressive considering its decentralization. And I'm going to say Binance Smart Chain is impressive as well, but again, we have to consider decentralization because it is very important, at least in my opinion. The next metric we're going to take a look at is total value locked, or TVL, and it's the most common metric for measuring the success and growth of decentralized finance, which it basically represents the value that's locked in decentralized applications for lending, for liquidity mining, and whatnot. But rather than focusing on the absolute number, I want to focus on the dominance, the relative dominance. And as you can see here, Ethereum is the undisputed leader. Solana is picking up some steam, but it's just so much further away. This is why Ethereum has a huge head start. Cardano is not even on the map yet because, as we know, smart contracts just rolled out. So yeah, we're still early in this game, but Ethereum has a huge head start and is the clear winner in this category. The next metric, total value staked, is different from TVL, and this represents the value that's locked to secure the network. So these are people staking rather than being locked up in DeFi dApp. As you can see here, Solana and Cardano are neck and neck as the clear leaders, but we have to consider that Ethereum 2.0 proof of stake hasn't been rolled out yet, which is why they're lagging in this category, and they're also intentionally lowering the percentage stake, presumably to maintain liquidity on their protocol. The next thing I did was take a look at the social media metrics of these smart contract platforms to just gauge their popularity. And by no surprise, Ethereum and Cardano have the most followings across Twitter and Reddit, about 2.6 million and 1.5 million combined respectively. Binance is definitely up there. Solana is picking up some steam, but we don't know how much of this is sustainable versus just hype. But what I was more interested in was the developer network GitHub, because that's essentially where the wheels on the bus are made. The most actively developed protocols are Ethereum and Cardano. They're essentially on a league of their own with about 800 and 700 average weekly commits to their code respectively. When we take a look at monthly active developers, Ethereum leads with 220 monthly active core developers, followed by Cardano at 144 and Bitcoin at 103. Ethereum leads by far with the number of star developers in GitHub, followed by Bitcoin. So as you can see here, Ethereum in terms of the developer network leads by a long shot, and this is probably the most important category, but Cardano is very impressive considering where it is right now. Here's another interesting graph in my analysis which showed the relative Discord members versus GitHub developers on a project. So any moon boy can join a Discord, but the real development happens on GitHub, which is what I said. If there's a huge divergence of members in Discord versus GitHub, it should tell you something. It tells me that there's just more bark than bite, or more talking than walking. Basically, there's just more hype. I was just trying to come up with a fancy metaphor, but you get what I'm saying. So, okay, in conclusion, as you can see, it's very difficult to determine who wins this smart contract war. There's just so many metrics, so many things to consider, and it's just a very difficult task. And there's a lot of technical aspects that we have to consider. But to me, like I said, decentralization is really important for the layer one. And to me, the clear winners right now in terms of the scalability trilemma, which factors in decentralization, scalability, and security, Ethereum and Cardano are the winners. I'm a business guy, and I know that Ethereum right now has a huge head start. For me in business, it's always been about making the first mover's advantage and figuring it out along the way. It's not about making the perfect product and then releasing it to launch, because that's never worked for me. As an operator, I just know that that's the best way to do business, and I know that that's where I believe in Ethereum. I would definitely not bet against Ethereum. I think it would be a mistake to bet against Ethereum. That doesn't mean that you can't bet on other smart contract platforms like Cardano, Solana, you can go for, but again, that decentralization thing is now a debatable topic, and that becomes what is going to be adapted by the people. I'm not saying that there's no place for centralization. There is a place for centralization, but I think that's probably more going to be towards platforms like Polkadot and Cosmos, because I can see the reason why. But I could be wrong. You know, there could be more of a centralized approach, but I think decentralization is really important because that's the ethos of blockchain and the reason why Satoshi Nakamoto invented Bitcoin. But again, which is what I mentioned in the first part of this video, I wouldn't even count out Bitcoin because of the fact that they're going to be adding smart contracts as well. And again, if we think about the ethos of blockchain technology, decentralization is the core. So which is why I'm counting out things like Binance Smart Chain. I'm counting out what do you call it? Just lost my train of thought. Solana. I'm not trying to disrespect it. So I would definitely weight my portfolio more towards Ethereum and Cardano as a bet. You can bet on the others, but again, this whole space is risky, but in order to mitigate my risk, I would definitely bet on Ethereum as my #1 holding. I could be wrong, and I'm open to discussion. If you think I've missed anything, let me know in the comments. If you like this video, hit the like button, subscribe. I really appreciate you watching, and hopefully to see you on the next one.